So I'm going to run through the paper money positions. These are mostly earnings trades. Today is Friday, March 8th, 2019. Starting with 8MAR2019. So, Stephen, right side. Sorry. 8MAR2019 was just a short put. So we put a put on just to see if there would be put on us. And that, even though it ends next week, almost 30% profitability. So short put, good. Ballard Power. So again, short put. That one did not work out. So looks like that one stock went down, and Ballard Power lost money. That is, so it's at 2. Yeah, I'm not sure why that would have lost money. Seems like since the stock is trading above, but I don't know, maybe implied volatility skyrocket. So strike against Ballard Power as the short put. Next one, CAR DNA or CareDX CDNA. That one is showing overall neutral, 0%, and that's a put spread. So the short put out of the money. It's trading at 34. That's interesting. Why? Oh well, it's net neutral. So put spread, yes, good. CN sold the call. CN must have gone down. It's trading at 39. So that is expiring today. That's be 100% profitability, expiration today. And then Cooper, that looks like an iron condor. Positive. That's 12% profitability. If I would have just sold the put, that would have been very profitable. Buying the call would not have. It's an interesting juxtaposition. So it's right between the 290 put and the 310 call. If I would have just bought the put, it would have lost money. If I would have just sold the call, I would have gained actually the most money on that. So it actually had gone down, yet I still profited by selling the put and selling the call. And Cooper announced on March 5th, which was this week. So let's see what happened there. Cooper, their stock, yeah, it plummeted in earnings. So that's a good earnings trade. The Iron Condor, but a short strangle would have been just as good. So far the put spreads, short put, and short strangles are good. All right, CRM. So sold the put. It's after they missed earnings, and that was because the reason I sold the put on this one was because I wanted to get into a CRM position. I wanted to get into Salesforce, but I wanted to get in at a bargain. So I wanted the shares put on me if it continued to go down. And what happened was, yeah, it went down, got a pretty good premium, and then look today, it's considerably up. So that net me, even though it's closing today, that net me a pretty good profit. So this is why CRM or Salesforce is why I wanted to get in the position, because I knew it was probably going to go back up. It was a bargain after earnings, and look at it, it's already going back up. Also the Ichimoku, the span A is above the span B, Tenkan above the Kijun, although it looks like the span A is about to cross over. Anyways, selling the put on that, good idea. Going next, CTRP, selling the put on that. So you can see after earnings, even though implied volatility was relatively low, it kind of plummeted. Still give you some good profitability. So, and even though it went down, selling the put was still a good move because sold the 32 put and it came nowhere close to that. So you can make some pretty good profits just selling the puts. And that was, let's see what delta that was. CTRP was at the, well, most of these were at the 10 delta. So all of the short puts have been profitable. Looking at G-wire, guide wire, that shows profitable. So selling the 10 delta put, 10 delta call, both stayed out of the money, and that resulted in a 27% net profit. HIQ, slight profit, but had to be careful. The put deep out of the, I should have sold the put farther away, and the call farther away gobbled up a lot of the profits. Otherwise it would have been highly profitable for just the short strangle. Coles sold that short call, finished far below that, 95% profitability. NIO, the short strangle would have failed, so good thing that was an iron condor. You can see a $1,800 loss versus a $591 profit, but because I bought the put, it offset a large part of that loss, resulted in a net loss of only negative 8%. But you can see that it dropped to below 10, therefore put that put in the money, and you can see right after earnings, far plunge. Ichimoku shifting. And I don't know if it's any indication, but the day before there was a large drawdown, and look at it now. So it looks like it's probably going to rebound, so maybe a short put would have been fine. NX, also a loss. The put is in the money, short put. Ross Stores, slight loss. SINA, sold the call, stayed well below that. And then with Target, sold the call, still below that. March 15th is expiration. Unify, it's an iron condor, slight profit. But let's go back to more expiration today. Weibo, WB, sold that 78 call. It closed today well below that, 100% profitability. And YY, another expiration today, sold the put well below, and that ended up very profitable. So that's all. The short put and the short strangle were profitable.